This is Ken Jacobson. I'm a senior mortgage planner and a loan officer with the Home Trust Mortgage, and this is your mortgage market update for the week of the 19th through the 23rd. We got a mix of policy headlines, economic data, and housing signals. We're moving in the right direction, but not in a straight line, but we never move in a straight line. Last week, on the 8th, President Trump instructed Fannie Mae and Freddie Mac to buy a sizable amount of mortgage-backed securities in an effort to lower rates, improve affordability, and stimulate home buying. We actually saw rates start down in response. But then the markets got distracted by geopolitical events, and a good portion of that improvement was quickly erased, unfortunately. The takeaway: policy backdrop is supported, but short-term rate movement can still be choppy. Direction matters more than day-to-day swings. Private employment data show job growth slowing again. Tells us hiring momentum is slowing. If upcoming monthly jobs reports come in soft, it puts less pressure on inflation, gives the Feds more room to cut rates. Lower rates are showing up in buyer behavior. Mortgage application data. Purchase applications are higher than they've been in a long time, and refinances jump. That only happens when affordability improves, and it's coinciding with recent home sales data. Lower rates for longer, pulling people back into the market. The Fed's preferred measure of inflation, personal consumption expenditures, showed year-over-year numbers tick slightly higher in November. But looking ahead, the comparisons we have to compare them to for this month and February should help us in bringing inflation figures down. More importantly, the monthly inflation figures were lower. The core rate that the Fed really concentrates on is running very close to what their target is. Final read on third quarter GDP, how the economy is doing, came in much stronger than expected. The economy is growing, but not in a way that's reigniting inflation. That combination, steady growth, cooling inflation, is exactly what supports housing without pushing rates back up. Pending home sales in December, context matters. They declined slightly, but they always do in December, and the holidays fell in the middle of the week, which is worse. Also, there was bad weather up in New England, so there was nothing going on there. This looks more like a temporary blip than a trend because November was the highest in 3 years. Houston continues to sit in a relatively healthy position. Buyers are rate sensitive, but clearly very active. Lower rates are improving affordability. Inflation's moving in the right direction. Supply remains constrained, but enough to support prices. This isn't a runaway market, but it's also not losing momentum. It's a market adjusting and responding to better conditions. If you want me to help you navigate this market or try and walk you through the numbers, give me a call, 832-524-5253. Thanks for watching. Have a great day, a great weekend, and God bless you. And be safe out there.